Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Ed Pryor of SFC Capital to talk about the Startup Funding Club, SEIS and EIS funds. So Ed, welcome back to the studio. For those who aren't familiar, can you explain who SFC Capital are, and can you give us some background to the SEIS and EIS funds?
Sure. Well, thanks for having me back, Jonathan. It's good to be here. So SFC, we are the UK's most active early stage investor. We back around 100 startups each year, building highly innovative and diversified portfolios for our investors who also benefit from SEIS and EIS tax relief. So within that equation, we have our market leading SEIS fund, which is really the centerpiece of SFC and what we've built our reputation through. And we work with leading universities, venture builders, accelerators, strategic angels to back kind of groundbreaking founders and innovation at its earliest stages. And the success of this SEIS fund is what has really catalyzed the growth of our EIS fund, our follow-on EIS fund, which is the second half of SFC's overall makeup. And this fund targets the best performing companies from within our portfolio of over 500 businesses to reinvest with. And so taken together, they're the two halves of SFC, our SEIS fund and our EIS fund. And then my role as Head of Investor Services is to work with our investors and our advisors to deliver the best possible experiences and outcomes.
Oh, very good. And so turning to the portfolio then, maybe taking the SEIS fund first, what sort of companies are you looking to back? What kind of stage are they at? Have you got any good examples there?
Sure, yeah. So in terms of the companies that we look for, so we're generalist investors. We invest across the whole of the innovation economy. So our sweet spots tend to be areas like deep tech and AI, where we're the UK's most active investor, climate tech, we're Europe's most active investor, fintech, we're currently this year the UK's most active investor there, and then areas like life sciences, like biotech and medtech, which are kind of core tenets of the UK's industrial strategy. We have a lot of activity in those areas, and then other kind of high growth areas like consumer tech, B2B software, and so on. We're big believers in diversity. We bring a lot of diversity into each portfolio that we build, and we do this for a couple of reasons. So firstly, in order to spread risk across multiple sectors in this perpetually changing world that we live in, but also to capture multiple growth market opportunities concurrently. Now, despite that and the fact that we are big believers in sector diversity, there are shared characteristics that we look for in businesses as indicators of potential success. So we have a unique scoring system that measures companies on around 60 different data points, but really they can all be grouped into kind of core pillars. So we're looking at things like levels of innovation, fulfillment of acute market needs, the excellence of the founding team. That's probably the most important point, because although it's very hard to predict the success of a business at these early stages, you can get a good idea of whether a business has a chance of being successful based on that early team. And of course, the potential to deliver outsized returns for our investors. So to give you a couple of examples of portfolio companies, a good one to start with is 4D Medicine, who I believe you guys are actually working with at Wealth Club as well at the moment. So they have built surgical implants that are resorbable. So it's a unique piece of IP that, and what it means is that when somebody goes in for a surgery, they might have a plate or a mesh or something similar put into their body to help ligament and bone development. And instead of having to come back and take that out in a second operation, 4D Medicine's materials is actually resorbed into the body, saving the need for that second operation. So we invested, I think, 3 or 4 years ago in 4D. They've just had a brilliant time since then. They're a good SFC story because we saw brilliant IP, an excellent founding team, and a good market to go into, worth about £7 billion. And you know, since then they've gone from strength to strength. So they've just closed a Series A, 4.5 million Series A. They actually rejected a 40 million acquisition offer recently from a FTSE 250 biotech. And they've got a big future ahead. And it works as a good SFC example because we invested in the SEIS fund. They proved themselves to us, hit various milestones, and then took follow-on investment from our EIS fund once they had proved our original conviction. Another good example is Magic AI. So this is a company that we're really, really excited about. They've just won a couple of awards, one for being best AI company in the UK, another one for being best UK startup. They've developed the world's first AI personal trainer. So they've built a mirror-like product that watches your form, your movements, and gives you personal coaching in much the same way a personal trainer might. So they've had a massive year. They're now doing over 8.5 million. They did over 8.5 million in the first half of 2025, which is over 300% year-on-year growth. And again, as an example of, you come in through the SEIS fund, you prove yourselves, hit the milestones, and then you're ready to kind of compete for EIS follow-on investment.
Oh, very good. And then ultimately, you want to see some exits. The environment for exits has been pretty tricky recently. Any exits you can speak about, Ed?
Absolutely. So, I mean, overall with SFC, I think we've had now 30 positive exit events. In the last year, we've had 6 full exits, 4 partial exits. You're right to say that the kind of M&A, the exit world was quiet for a few years post-COVID, but in the last year, 18 months, it's started to pick up. And I think that actually the most exciting factor of that market is the emergence of the secondary market, which has been a bit of a sleeping giant in the UK for a long time. But for early stage investors like ourselves, it represents a really good opportunity to get money back to investors and get liquidity going, whilst also de-risking portfolios. So examples there, just to give you a couple of examples. Very recently, we did a partial sale of 30% of our shares in Ryft, which is a payments platform for marketplaces. That delivered I think it was a 6.5 times return for investors. This is all pre-tax relief that, of course, you get when investing with SEIS or EIS. Another example is Transcend Packaging, who we recently got I think it was a 6.5 times return and a partial exit from. Now, these guys are a world-leading sustainable packaging company. They work with McDonald's, Starbucks, Pret-a-Manger. And so that was a really good opportunity for our investors to get a little bit of liquidity back, de-risk the portfolio, but still hold a serious amount of shares within the company as it continues to grow.
So who are these secondaries investors? Because it's definitely a trend within SEIS, probably more so than EIS even.
Mm-hmm. Yeah, so they tend to be fund managers or large family offices, large institutional investors who want to come in at either kind of the Series A, Series B stage of the company, of the company's journey. And it allows, the trick is that you've got to be investing as an early stage investor at reasonable valuations to then allow yourself the opportunity to take advantage of these secondary moments. If we invested a company valued at about £2 million, and then they do a Series A valued at, let's say £10 million, there's room in there to do a partial sale and deliver a good return for your investors.
And this is where one of those later stage funds, they might want to take, say, a £5 million exposure, but the round might be 4 million.
Exactly. And so it's a way of making room for those larger investors and allowing us to take some profit off the top.
Oh, very good. And then, so turning to risks, SEIS is always tricky to explain the risk involved, I'd say. How do you do that, Ed?
Well, so just so your viewers understand, so to qualify for SEIS, a company must be within 3 years of trading. So they're naturally young by their very nature. This doesn't mean they're only 3 years old. We've got, 4D Medicine is a good example of a business that was in development stage for years and years and years, taking hundreds of thousands of pounds in grant funding, but then arriving to us within that 3-year trading mark, therefore qualifying for SEIS. But they are young companies, and so that means that they've got the largest hill to climb, even if there is the most profit potential for early investors. So on a per company basis, it's a high risk investment, but that's why we adopt portfolio strategies. So we build out large portfolios, and as I said before, we build in sector diversity as well, so that you can cope with inevitable losses along the way, which are to be expected, and in the SEIS and EIS world, comes with the added benefit of getting loss relief as well on the investment. But the portfolio approach does negate a lot of that risk and helps drive a sensible investment strategy.
Of course, investors can invest in multiple tranches and build a larger portfolio.
Absolutely. So we have, in the SEIS fund, we do 5 tranches each year. So investors can really invest up until the end of February and know that they'll be deployed within the current tax year. And the EIS, we deploy 2 funds each year.
And so taking everything we've just discussed, Ed, for those who want to back an SEIS or EIS fund this year, why should they be choosing SFC?
Well, SFC on the SEIS front, we're the market leader for a reason. We've really built our whole business model through SEIS, which is, I think, how we've come to be in the position where we are as kind of undisputed leaders of the market. And our EIS fund is a really unique model that is benefiting from the huge success of our SEIS fund. It gets priority access to a portfolio of 500 of the most competitive investment rounds in the country, which means that we're able to get access to investment rounds that other funds may struggle to. And it's also built in a follow-on manner, which means that we've spent months and years getting to know these businesses, the good, the bad, the work-ons, before we consider them for reinvestment. So we know them in a much more intimately detailed way than if we were ever approaching them for the first time. So I'd first of all congratulate any viewers for getting involved in SEIS and EIS fund investing. It's a really useful tool for high net worths. And certainly I'd recommend SFC as a leader in both of those fund managements.
Ed Fryer of SFC Capital, thank you very much. If you're watching on YouTube, please press like or subscribe to the channel for more.